It is the 23rd of November 2021. My name is David Hickson, and in today's market update we're going to be taking a look at the S&P 500 and also the FTSE-100 from the UK, and we're going to be going back to basics a little bit and discussing the way in which price interacts with the very powerful cycle tool that Hurst discovered, the future line of demarcation. Let's start by taking a look at the S&P 500. And this is one of the analyses that we've been looking at over the past several weeks, which of course positions the 18-month cycle trough over here at the beginning of October. This is a very visually pleasing analysis, if you like, because the most prominent trough that we have witnessed for several months has been phased as the most prominent trough in the analysis, the 18-month cycle trough. But as mentioned in previous market updates, I do have reservations about this analysis, in particular the fact that I have had to position the 40-week cycle trough at this very questionable position over here in order to achieve this analysis. The alternates would have been to position the 40-week cycle trough early here, resulting in a very short 40-week cycle followed by a very long 40-week cycle. That is not impossible, but it is not as visually pleasing. Now, a visually pleasing analysis might sound like a funny way of looking at things, but of course Hurst's analysis process that he presented in the cycles course was effectively a visual approach. It's a pattern recognition approach. And that is what has always appealed to me about that analysis process. And although a visually pleasing analysis does not necessarily mean it is the best analysis, in fact, often it isn't. A visually pleasing analysis is a good place to start, in my opinion. The alternative, of course, for having a short and then a long 40-week cycle here is to position the 40-week cycle trough a little later, which means that we then get a long followed by a short 40-week cycle. Again, neither of those options is impossible, and we will take a look at other analyses in a moment that present both of those possibilities, I believe. But for now, we're going to start with a consideration of this analysis, and in particular what has happened since the 18-month cycle trough at the beginning of October, because what we really want to speak about in today's video is what we are expecting to happen next. It's fascinating to look at an analysis and discuss in great detail what has happened in the past, but what is more important, of course, when you are looking at financial markets is to be able to gain some insight into what is expected to happen next in order to make sensible trading decisions. And as much as I love to spend hours discussing subtleties of analysis, it is more important to consider what is expected to happen next so that we can make sensible trading decisions. And I have plotted the 20-day FLD on this chart because, of course, the way in which I apply a Hurst cycles analysis mostly has to do with the way in which price interacts with that FLD, which is a fairly regular sequence that I discuss in all of these videos. So what are we expecting to happen next here? Well, it's fairly obvious. At the foot of the chart here is the nest of lows for the next 80-day cycle. You can see that 53 days have elapsed since the trough at the beginning of October. Now, the average length of an 80-day cycle is 68 days, and if you don't understand why that is, I would encourage you to download the 10 core concepts of Hurst cycles PDF, which I will provide a link to underneath this video. And so we have about 15 days to go, about 2 weeks to go until that 80-day cycle trough is expected to form. And so the bigger picture is that we are expecting price to move down into this 80-day cycle trough. Is 15 days a good time estimate? Well, we need to consider the other cycles as well, and you will notice this bar count over here, 13 days have elapsed since the most probable position for the 40-day cycle trough over here on the 10th of November. Now, I discussed this in last week's video. It seemed likely that the 40-day cycle trough formed there, and I still think that is a likely position for that trough. And so we have 21 days left to go until the next 40-day cycle. Of course, the next 40-day cycle must be synchronous with the 80-day cycle, principle of synchronicity, one of the very important principles that Hurst defined. And so the 40-day cycle would imply that we have 21 days left, and the 80-day cycle would imply we have 15 days left until this trough. And so that trough is expected to occur sometime in about 2 or 3 weeks' time, as indicated visually on the chart by means of this nest of lows. So middle of December is a good time to expect that 80-day cycle trough. But now, what about the FLD that I have plotted on the chart? How does that help us? Well, we have a sequence of interactions which has been distorted recently, as discussed in last week's video, following a trough of at least 80-day magnitude. The first interaction between price and the FLD, the 20-day FLD, is the A category interaction, which occurred over here and generated a target somewhere up here, which was, of course, achieved and exceeded. We then expect a B-C category interaction, and we experienced one of them over here at the formation of the 10-day cycle trough, but the true BC category interaction is expected at the time of the 20-day cycle. And so the 20-day cycle has been very difficult to actually pinpoint on this chart. As you can see, according to Sentient Trader, it has positioned it under this bar over here, and it is making the assumption, I can tell you, that potentially price would have shown some weakness if it had kept trading through the weekend and then bounced up again on Monday, providing us with a fairly distinguishable trough, if you like, for the 20-day cycle trough. And so the BC category interactions should correctly really be identified around the formation of the 20-day cycle trough. And we're going to be going back to basics, as I mentioned, in a moment, and discussing some of the details behind the identification of interactions with the FLD, because there has been some confusion. We've received many emails about the interactions of the FLD, and actually correctly identifying them has been a little bit tricky, but if you follow some basic rules, it has not been impossible, in my opinion. Here is the 40-day cycle trough. Now, the next interaction is, of course, the D category interaction, which is when price moves down into the 40-day cycle trough. You will notice price didn't even touch the FLD. I discussed this in last week's video, so I don't need to dwell on it. In my opinion, the correct identification is a D category interaction as price moves down towards the FLD, and the E category interaction was where price moved away from it. And I know that there are many people who disagree with me and like to argue the point. I'm very happy to argue the point, but we're not going to spend time doing that now. Price then did a sort of a side sweep, if you like, of the FLD throughout last week, as you can see over here. It sort of bumped accidentally into that FLD. Might sound like a strange way of describing it, but price did not cross strongly down below it to form a clearly defined interaction. It sort of accidentally bumped into it because the FLD rose up to meet price. That's not a very good, clear interaction, and so I choose actually to simply not label those interactions. I know that on our Hurst signal system, which feels obliged to interact an interaction when price does actually touch the FLD, this has caused some confusion, and there's been some to and fro in terms of the identification of those interactions. The important thing, in my opinion, is what you're looking forward to next. And so during this period of time, the Hurst signal system at various times said that we are currently engaged in a C category interaction, and so the next interaction is a short trading opportunity for a D category trade. In my opinion, that was not entirely correct. However, it doesn't change our expectation, and that's really the important point to make here. My expectation was an F category interaction, a short trading opportunity when price crosses down below the FLD, and that is what I believe is happening round about now. As a matter of interest, over the weekend, the Hurst signal system righted itself and said, okay, we're getting a bit late for a D category interaction, therefore our next interaction will be the F category interaction. And so our two slightly different ways of approaching the identification of the interactions came back into sync. And you will find that kind of thing happening time and again when the identification of the interactions is fairly difficult. The important thing is not necessarily exactly which letter it is, but it's what trading opportunity is being identified. And in this case, it was either a D category or an F category opportunity that was being identified. Both of them are short trading opportunities. And the trading opportunity that we have available to us now, that is possibly taking place right now, is of course an F category interaction, which is where we are expecting price to cross down below the FLD on its way down to this trough over here, which is the 80-day cycle trough. So that is what is happening, and as mentioned, there's been some difficulty in terms of interpreting the interactions between price and the FLD. We're going to loop back and look at that in more detail in a moment. But let me quickly look at the other two analyses that we have been tracking in the S&P 500 and just discuss how they differ. The first analysis is one that I was describing as my preferred analysis for several months, I think it was, which takes the idea that the 18-month cycle trough formed here in the middle of July. And I know that many analysts struggle with that concept because of the fact that the 18-month cycle trough was then just little more than a blip in price action. However, you do sometimes see that happening. I've been doing this for quite a long time, and I must tell you that although the visually pleasing analysis is usually the best one to look at, it is not necessarily always the correct one. And so the idea that the 18-month cycle trough formed in the middle of July is still a very viable one. How does this analysis differ in terms of what we are expecting next, or I should say expecting to happen now? In fact, it does not differ very much. As you will see, the FLD, when plotted on the chart, is in almost exactly the same position. I think it might be displaced by perhaps half a day or perhaps 1 day, but it is in very much the same position. The big difference is that the trough that we are moving down into, which is still expected at about the same time, you can see in about the middle of December, early December to middle of December, that is in this case expected to be a trough of 20-week magnitude. If we identify the interactions between price and the FLD, we have the same difficulty in terms of identifying the BC category interactions and indeed even the D and E category interactions. Here is the 40-day cycle trough, exactly the same as it was in the other analysis. And so in my opinion, that was our D and this was our E. And the interaction that we are looking at taking place right now is the F category interaction, where we expect price to cross down below the 20-day FLD on its way down to the 20-week magnitude cycle trough, which in the other analysis is a trough of only 80-day magnitude, but it is expected at about the same time. And so our expectation doesn't really differ. We're looking at price moving down into a trough. Is it possible that that trough could be a much bigger trough? Is it possible that price could move down really hard? It is just possible. Let's take a look at that. Now, this is an analysis that I have presented several times in these market update videos. It is what I call the default analysis. It's the analysis that Sentient Trader is performing without me influencing it at all. I should point out that if you were to load up this data into Sentient Trader right now and perform a default analysis, this is unlikely to be the analysis that the software will show you. And that is because an analysis develops over time. It's a fairly complicated aspect of the way in which Sentient Trader performs an analysis, but it's the way that as an analyst I have always done things. I carry an expectation from the previous day's analysis into the next day's analysis. I'm not going to dwell on it now, but the fact is it has become a very interesting analysis to track, in my opinion, and I continue to keep an eye on it. So you can see here that the 18-month cycle trough still lies ahead of us. Many of you might say that is absurd. Clearly the 18-month cycle trough lies behind us. But I do think it's important to keep our eyes open and consider the possibilities. What are the implications of this analysis? Well, the implications are obviously the price is going to come down, which is the same implication that we get from our other two analyses. But in terms of this analysis, we're expecting it to form an 18-month cycle trough, which is a greater magnitude cycle trough, and therefore we could expect a stronger move down. How strong? Well, the composite model line is a useful tool for understanding the implications of an analysis. The composite model line is indicating, as you can see over here, that price is expected to move down, not very strongly, but certainly more strongly than would be expected if the 18-month cycle trough lay behind us. And so that is really the big difference with this analysis, is that we need to keep our eyes open to the possibility that this analysis is the one that is unfolding, although in my opinion it is really becoming less and less likely with each passing day. If we zoom in here and take a look at what has been happening to the composite model line, you will see a very big discrepancy has emerged recently, with price moving strongly upwards, whereas the composite model line expected price to move downwards. Why? Well, because of the analysis and the fact that price has got to come down in order to reach this trough. You'll notice this trough is centered at around about the same time in the middle of December. And so even according to this analysis, we have the same expectation, which is the price is going to move down to form a trough in about the middle of December. If the move down is stronger than expected, well, all good, because we are expecting a downward move, and then we will come back to this analysis and consider whether in fact this analysis is valid or not. If price does not move strongly down, we will still come back to this analysis and see what is happening, and we will probably observe that the 18-month cycle trough is being moved and positioned to an earlier time. Now, I would like to take a look at the FTSE-100 to compare what has been happening in the FTSE-100. It's a very important thing to remember, the principle of commonality, which Hurst defined, which is that markets move with a great deal in common. What that means in practical terms is that different markets around the world are being influenced by the same cycles. And when a cycle analysis is a little tricky in one market, it's a very good idea to look at other markets because they can provide us with some useful clues. So let's take a look at the FTSE-100. And here is that analysis. I've presented it in these market update videos before. We have the 54-month cycle trough, of course, in March of 2020. Here is the 18-month cycle trough, which is very nicely positioned over here in the middle of July. Yet another reason why I still believe that is a very viable position for the 18-month cycle trough. When an 18-month cycle trough forms fairly clearly in one market, then it is a high possibility that it is also formed in another market. Of course, one could debate the position of this 18-month cycle trough in this analysis, and one could position the 18-month cycle trough over here in the middle or third week of September. But I'm not going to spend time discussing that possibility, because what I want to do is focus on the FLD and discuss again the interaction between price and the FLD, because it has been a lot clearer in this particular analysis. So starting with a trough of 80-day magnitude, which is this trough over here in September, which, as I mentioned, just could possibly also be an 18-month cycle trough. Nevertheless, it is certainly a trough of at least 80-day magnitude, possibly 18-month magnitude. We get our sequence of interactions. Here is the A category interaction. And the next interaction, which is expected to form at about the time of the 20-day cycle trough, is a B and then C category interaction, which I now generally label simply BC and combine them because often they are only visible as one interaction where price finds support at the level of the FLD. So let's actually zoom in and take a look at this in a little more detail, so it'll be a little bit clearer. Here we go. Here is our A category interaction, a good price cross, and price has achieved that target. It achieved it a little bit late, but nevertheless it achieved it. Now the BC category interaction, as I have mentioned, is expected to form at about the time of the 20-day cycle trough. There it is. There's that 20-day cycle trough, and that is where price is expected to find support at the level of the FLD. Well, It would be fudging the story a little bit by calling that a matter of price finding support at the level of the FLD, but as I think you can see on each day, except for this day over here, price did actually have a high price above the level of the FLD, and so you could argue that price found support at around about the level of that FLD. The C category interactions where price came up and bounced away from the FLD. Now here is another interesting situation surrounding the 40-day cycle trough. Strictly speaking, the D category interaction is as price crosses down below the 20-day FLD on its way to forming the 40-day cycle trough. Here, as is the case in the S&P 500, price did not in fact cross below the FLD. So what do? Well, in my opinion, we label the D category interaction as simply a matter of price moving towards the FLD. Remember, an interaction does not necessarily have to be a matter of price crossing the FLD. It could simply be a matter of price moving towards it. I know some people struggle with that idea, but when we take a look at the basics in a moment, you will see, I think, why I speak of it in those terms. The E category interaction is where price moves away from the FLD. Yet again, price sort of side swiped the FLD. Can you see this Monday bar over here, where price opened beneath the bar because of the fact that the FLD had crossed above the price level over the weekend? Remember, a very important aspect of Hurst's approach to the markets was that the cycles that he had found influenced those markets according to calendar time, not trading time, which is why sentient trader charts always display the weekends on the chart. It was a very important fundamental concept, if you like, of the cycles that he discovered. And so this interaction on this Monday over here is a little bit of a side swipe, in my opinion. It's not really a genuine interaction. Here we had price touching the FLD again, and it crossed down below it and then bounced back up again. Some analysts would position the 40-day cycle trough over here. I am not one of them, because you must remember that the identification of the way in which price interacts with the FLD is not foundational, if you like, to a Hurst cycles approach. It is, in fact, a result simply of my observation of the way in which price tends to interact with the FLD. And so, in my opinion, it's more important to get a good, solid analysis and then to look at the way in which price is interacting with the FLD. Of course, those interactions with the FLD can be used to inform your analysis, but in my opinion, the analysis comes first, and that is why you can see this analysis here as it is with the 20-day cycle trough over here and the 40-day cycle trough over here. Nevertheless, you might want to label these interactions over here as another sort of a DE category interaction. I don't do that. I just describe it as a bit of a messy takeoff from the FLD. And in fact, you can see price nudged the FLD over there again, and over here it nudged that FLD. I don't label those interactions because, in my opinion, it's just a matter of the imperfections that are constantly present in the market, and if we'd been on our toes, we would have been able to observe, hopefully, that was not an F category interaction that was shaping up in the market over there at that time, although of course we would by then have been expecting an F category interaction. The F category interaction occurred over here, and so the correct labeling of this interaction is to position the F category interaction over there, and I believe that target has been reached. We could measure it and calculate it exactly, but I believe the target has been reached, or if not, it has very nearly been reached over there, and price is on its way down to this trough over here, which according to this analysis is a 20-week cycle trough. Of course, if this trough here in the third week of September is an 18-month cycle trough, then this will only be an 80-day cycle trough. And so we have the same question mark over the magnitude of this cycle trough here, which is expected to form towards the end of November or perhaps early December, either 80-day or 20-week. Now, I know there are some analysts and traders who get very hung up on the concept of not knowing the exact magnitude. I don't worry too much about it. The fact is we are positioned for a move down into a trough, and that's all that really counts. If the magnitude of that trough turns out to be 80 days, okay, good. If the magnitude of that cycle trough turns out to be 20 weeks, even better, we're likely to see a bigger move down into it. Now, I would like to spend a few minutes going back over the basics of the interactions between price and the FLD. The reason I'm doing that is because of the fact that it has been difficult to identify these interactions, and we've received a lot of questions about it, and I would like to help you understand the way in which these interactions work and the way in which I discovered them, because I think that will help you to identify the interactions more accurately yourself. At least I hope it will. So let's take a look at a document. This is the introduction to the FLD trading strategy document, which you can download from our sequence of videos that introduces the FLD trading strategy. I will put a link to those videos in the description of this video as well, in case you don't have this document. I know that many people do have this document already. The important thing about the interaction between price and the FLD, as I've mentioned many times, is it's not actually something that Hurst defined, it's something that I observed. And so it's something that, in my opinion, comes after an analysis, as I have already mentioned. And I'd like to point out why I observed it to help in the correct identification of these interactions. First of all, this is what Hurst had to say about an FLD. This blue line over here in Hurst's diagram is price, moving in a fairly cyclical manner. Or perhaps I shouldn't say it's price, it is a representation of a cycle. And if price is being influenced by a single cycle, then you could describe that as being price. And this line over here, the dashed blue line, is the FLD, if you like, of this price. Or it is simply the same cycle displaced to the right by half of the cycle wavelength. Now, Hurst observed this when he discovered or defined the future line of demarcation cycle tool, and he observed three things. The first thing is that when price crosses the FLD, and I'm just going to continue to use the words price and FLD, although I know that's not strictly speaking true, but I hope it's going to make sense to you. When price crosses the FLD, it first of all, point number one, confirms the formation of a trough of this magnitude in the analysis. So that is analysis information. We don't speak about it very much because, of course, most of these videos are focusing on identifying trading opportunities rather than speaking about the analysis. The second piece of information that you gather when price crosses an FLD is the generation of a target. That's the second piece of information over here. That is where price is expected to rise as a result of the cycle influence. The third piece of information, which we also don't discuss very often in these videos, is the fact that when the FLD forms a low point in the future is when, in terms of time, you would expect price to form a peak or a high point in the future and, of course, achieve its target. So those are the things that Hurst actually defined when he spoke about the FLD. Now, I started trading with the price and the FLD, and I was performing an analysis manually. I was working with TradeStation software as a matter of interest and plotting the FLD on my TradeStation charts, but I performed the analysis manually before I created Sentient Trader, and I was trading the FLD, and I discovered an interesting thing, which is that sometimes when price crosses the FLD, it would indeed move upwards towards its target and very often achieve it with remarkable accuracy. I called that a golden FLD cross. It was the perfect trade. However, I also noticed that there were as many occasions when price would touch the FLD or maybe slightly cross it, and then it would simply reverse direction and do exactly the opposite of what could be expected. I started asking myself why this was. How was it that sometimes you would get golden crosses and at other times you would get leaden crosses and everything would go wrong? I spent a lot of time thinking about this and trying to work out why it was. And I discovered that the reason is because of the fact that there is not one cycle influencing the market at any time. There are in fact multiple cycles that are influencing the markets at any one time. And when I combined multiple cycles, and this is a description of what could be expected to happen when 3 cycles are combined. Here are the 3 cycles at the foot of the chart. We have a pale cyan colored cycle, a purple colored cycle, and a yellow colored cycle. They obey the principle of proportionality in terms of their wavelength, and they also obey the principle of harmonicity and synchronicity. They do not obey the principle of proportionality in terms of their amplitude, I should point out. Their amplitudes are not proportional to their wavelengths, and there's a very good reason for that. According to the principle of proportionality, the amplitude of a cycle that has double the wavelength of another cycle should be double the amplitude of that cycle. However, I found in my trading that this was the least reliable of all the principles. Now, the principle of variation tells us to expect variation in terms of the wavelength and also the amplitude. But also, I should point out, if you read Hurst's original work carefully, the principle of variation tells us to expect variation within the principle of proportionality. And I believe that is what is at play. And so I put together these 3 cycles. I plotted this FLD, which is this dashed pale blue or cyan colored line. That is the FLD, which is the FLD based upon the shortest cycle, which is why it is cyan in color, but it is displacing price, which is influenced by 3 cycles. And you will see here the sequence of interactions that have been labeled, the A and then the B, where price comes down to the FLD and it slips below it maybe, and then the C category interaction where it crosses above it. Here are the rest of the interactions. I don't need to go through them all. I'm sure that you can pause the video and you can study it all at your own leisure. But the important thing in terms of the interaction, or in terms of the identification of these interactions, is that they happen at a particular point within the progression of each one of these cycles. And that's the really important point. In particular, the B and then C category interactions occur at the time, or close to the time. There is some time translation, you will notice, but they occur at about the time of the first trough of what we call the signal cycle, which is the shortest cycle, or the 20-day cycle in the examples I've been showing you. Similarly, the D category interaction is very simply an interaction that is expected to occur when price moves down into this trough of the purple colored cycle over there, which would of course be the 40-day cycle trough. The E category interaction is where price moves back above the FLD, and so forth. You can complete the sequence, I'm sure. So here is the important point when it comes to identifying this sequence of interactions. Let's assume that the principle of proportionality is correctly applied and the longer cycles have greater amplitude because of their longer wavelengths. What you will find is that these interactions, the B and C category interactions, will come nowhere near the FLD. And in fact, if you stretch the amplitude enough, you will even find D and E category interactions that don't even reach the FLD, but will maybe just ever so slightly touch it. The important point about this is that when it comes to the identification of the interactions between price and the FLD, you have to consider how many bars have passed, how much time has elapsed, where are we in the progression of each one of the shorter cycles. And each one of these interactions, you must understand, could consist of price crossing down below the FLD, which is what is expected. But if the amplitude of one of the longer cycles is such that price is being pushed very strongly upwards, for instance, then price will come down to the FLD and might not even cross it. So when you're identifying your interactions, I would encourage you to consider how many bars have passed instead of simply tracking each and every time that the FLD is touched by price. And so when identifying your sequence of interactions, Remember to keep an eye on the analysis at the foot of the chart, or if you don't have an analysis, simply keep counting your bars and working out how many bars have elapsed, and use that information when identifying your sequence of interactions between price and the FLD. I do hope that you found this market update useful and interesting. If you have any questions, please put them in the comments below the video. I look forward to hearing from you.